Hey everybody, so the SEC new chair, Gary Genseler, has just made some remarks at the Aspen Security Forum, and I think this is going to have a lot of implications for crypto, so let's dive right in and look at what he said. Now, a lot of people, when Gary Gensler was announced as a new chair, had a lot of positive feelings that Gary Gensler would be great for crypto. I mean, I think a lot of this was led by the fact that he had professored a blockchain course at MIT. And they felt that he would be favorable towards cryptocurrency. But let's take a look at his statements, which give us the biggest indicator to date around where his thinking lies in terms of regulation and where he thinks the pros or cons are around crypto and what needs to be addressed. Now, he covers 5 key areas, which we're going to look into now. The first being the whole battle of a security versus a commodity. We know this was an issue in the XRP case, which is still ongoing. The second point he covers are crypto trading platforms, lending platforms, and DeFi platforms, and whether they need any regulation. The third, he touches the issue of stablecoins. We know this is an issue, and we've discussed this before around rehypothecation of stablecoins. The fourth being an ETF, and whether we could potentially see an ETF. And 5, the custody of your crypto, which again, we know is a big issue. Let's dive in and actually go line by line through his transcript. Right, so he begins by introducing himself. Okay, great. Speaks a little bit about Nakamoto and his vision. Fine. And then he addresses the fact that a dozen years later, the asset class is purportedly worth 1.6 trillion, with 77 tokens worth at least $1 billion each. Right, so we know that Bitcoin market's booming, the cryptocurrency market, is booming, and therefore, we're waiting for Mr. Gary Gensler to introduce some regulation. He then mentions, as I mentioned just earlier, that he led a course at MIT, and then he comes on to his methodology. Okay, so he says here, primarily, crypto assets provide digital scarce vehicles for speculative investment. Okay, thus, in that sense, one can say they are highly speculative stores of value. So straight away here, Gary Gensler is coming out and saying, at the moment, he sees crypto as merely a vehicle for speculation. He feels as though the majority of investors are in crypto for the speculative reasons, not to grow the ecosystem or provide value. And he touches upon that in, fiat money fulfills 3 functions. Okay, so he says it fulfills 3 functions: a store of value, unit of account, medium of exchange. He's saying no single cryptocurrency is currently doing that, and he's saying these assets haven't been used much as a unit of account. So in other words, he thinks they're just people mainly using it for speculation, to make more money. Okay, at least we know his view on that. He then says, as a policy matter, I'm technology neutral, but I'm anything but public policy neutral. Okay, so he's kind of distancing himself from saying, look, I'm not biased towards crypto just because I professored it. I'm neutral from a technology point of view, but I'm not neutral from my responsibilities as the chair of the SEC, and I want to make sure my public policies are there to help people and safeguard people. Okay, sounds good. We wouldn't expect him to say any less. Let's crack on now. Now he gets to his 3-part mission, right? So he says he's got a 3-part mission right here. 1, to protect investors. Great. We want to be protected. Facilitate capital formation and maintain fair, orderly, and efficient markets in between them. We focus on financial stability as well, but at our core, we're about investor protection. Sounds good. What's there to complain about? Right, so he's here to protect us, guys. If you want to invest in a digital scarce speculative store of value, that's fine. Good faith actors have been speculating in the value of gold and silver for thousands of years. Yeah, and you let them. So why the issue now with crypto? Let's see where he goes with this. Okay. Right now, we just don't have enough investor protection in crypto. Frankly, at this time, it's more like the Wild West. Strong language here, okay? So he's saying it's like the Wild West. He's saying anything can go out there, people can get burned. And look, to an extent, he's right. I don't know a person who's investing in crypto who hasn't been burned. But having said that, you can say the same for the stock market. You can say the same for real estate. Anybody who's doing any investments at a meaningful level, in the early days whilst they're learning, they get burnt. That's just how things work. But yes, okay, let's say there's a lot of, we'll come on to this shortly, actually. I don't want to jump the gun. Let's continue. So now he gets on to, so he says this asset class is rife with fraud, scams, and abuse in certain applications. There's a great deal of hype and spin about, look at these words. There's a great deal of hype and spin about how crypto assets work. In many cases, investors aren't able to get rigorous, balanced, and complete information. Okay, I think that's fair. If he's going to come out and say, look, we're going to put in policies and procedure to give more information to investors, I'm all for that. I want more information. If we don't address these issues, I worry a lot of people will be hurt. Okay. First, many of these tokens are offered and sold as security. Okay, so now we're getting into his first point, which I mentioned. He talks about this issue of securities. And then he goes on to mention the Howie Test. Okay, so we know the Howie Test. This came up a lot if anybody's following the XRP case. The Howie Test is the test that the SEC will use to determine if something's a security or not. Okay, he's saying he's happy with the Howie Test. He's going to continue to use that as the basis. Okay, and for those that aren't familiar with it, the Supreme Court took up the definition. This case said an investment contract exists when a person invests his money in a common enterprise and is led to expect profit solely from the efforts of the promoter or a third party. Okay, so if you're expecting that return, it's seen as a security, and we'll come on to that shortly. Right. So, he then goes on to say, look, I think the former SEC chairman, Jay Clayton, he was happy with what he said. He said, I agree to the extent that digital assets like ICOs are securities, and I believe every ICO I have seen is a security. We have jurisdiction and our federal security laws apply. Important point. Why are we fighting over whether it's a security or commodity? The reason is this. If a product is deemed as a security, if an investment is deemed as a security, that means that the SEC law applies, and therefore Gary Genseler and his team has jurisdiction over that. Okay, so, and he mentions this shortly later, if a trading platform is trading even one security from thousands of other tokens, they still have to be regulated by the SEC. Okay, very important point to note. So he says he finds himself agreeing with Clayton. Great, okay. I believe we have a crypto market now where many tokens may be unregistered securities without disclosures or market oversight. This leaves price open to manipulation. Okay, and it leaves investors vulnerable. Good point. I mean, like I said, we know a lot of people have been burnt chasing these ICOs without any meaningful data, without any meaningful information. Over the years, the SEC has brought dozens of actions in this area, prioritizing token-relating cases involving fraud, other significant harm to investors. He's stunting on us. We haven't yet lost a case. Go on, Gary. Go on, SEC, lads. Okay, good. Make no mistake, it doesn't matter whether it's a stock token, a stable value token based by securities, or any other virtual product that provides synthetic exposure to online securities. These products are subject to the security laws and must work within our securities regime. Very important. He's putting his foot down. He's saying, look, if you're offering any of these types of things which can be deemed as securities, you need to play ball by our game. Okay? And you need to follow our rules. And that he's making that very clear here. Let's move on to the second point. Okay, he goes, I'd like to discuss crypto trading platforms, lending platforms, and DeFi. Okay, this is your FTX. This is your Binance. This is your BlockFi. This is your Coinbase. This is even Robinhood. Okay. Now, he wants to, and as well as the decentralized finance piece as well. So this includes your PancakeSwap. Okay, your more important, your Uniswap's decentralized. Okay, and these decentralized exchanges as well. The world of crypto, let's see what he says about these. The world of crypto finance now has a platform where people can trade tokens and other venues where people can lend tokens. Yeah, we know that. I believe these platforms not only can implicate the securities law, some platforms also can implicate the commodities law and the banking laws. A typical trading platform, let's look at this. A typical trading platform has more than 50 tokens on it. In fact, many have well in excess of 100. Okay, good. While each token's legal status depends on its own facts and circumstances, the probability is quite remote that 50 or 100 out of 150, any given platform has zero securities. This is exactly what we're saying here. So they're not saying, that we're not saying that the majority needs to be quantities. They're saying as long as we can find one, which is a security or deemed a security by the Howie Test, which we've just covered, then your whole platform needs to be regulated. So if you imagine Binance trading hundreds of coins, if we find one which is deemed a security and they just need to prove that and then make the statement that, oh, XRP is a security, that then has implications for all of the exchanges that are holding XRP for that instance, because they will now have to play to the SEC rules. Very important, guys. Now, moreover, unlike other trading markets where investors go for an intermediary like the New York Stock Exchange, crypto platforms trade without a broker 24 hours a day, 7 days a week around the globe. Yes, this is an important point. Another point. All Gary's saying is here, look, with the stock market, I can put things in place. I can take care of people because, it's within trading hours. It's done for a few institutions which we know very well and in our pocket. And, we can make sure that if somebody loses their stocks and shares, we can put the procedure in place to remunerate them, right? We can put these regulations in place, but we can't do that with crypto. It's a 24-hour market. It's decentralized. We don't know what's going on. Okay, and this is the classic. They say, look, we haven't got visibility. We need visibility. And that's how they'll start to take the reins and start creating some control with some regulation. Okay, and now I know I'm sounding anti-regulation. I'll come on to at the end of how I don't think this is necessarily a bad thing, but it's important to be both a cynic as well as looking at it from an optimistic point of view. And I'll try to bring that balanced approach here for you guys. Okay, so where were we? So there we go. Furthermore, while many overseas platforms state they don't allow US investors, there are allegations that some unregulated foreign exchange facilitate trading by US traders who are using VPNs. We know this is happening, right? Bybit, all these platforms that a lot of these crypto YouTubers and influencers are pushing. We know that people are signing up with VPNs and using those and trading on 100x leverage. I'm completely for kind of limiting that and regulating that. I think that is the biggest hurdle here in crypto. It's at the moment it's where a lot of people are making a lot of money, and that's why they're bullish on crypto, because they're putting 100x leverage on a bet which is moving 10x and their quid's in. But that's for the short-minded people, right? If for those who are in crypto for the long game, we want to make sure that we've got this all under control, and that these kind of derivative plays on multi-leverage accounts where the liquidations are happening, that's what's causing this volatility in the market. So if we want this market to mature and start moving forward, we need to have some regulation in place around these matters. Okay, so the American public is buying, selling, and lending crypto on these trading, lending, and DeFi platforms, and there are significant gaps in investor protection. Agree? Make no mistake, to the extent that there are securities on these trading platforms, under our laws, they have to register with the commission unless they have an exemption. Again, exactly what we're saying. They're saying if we find one security on the platform, you have to regulate with our commission. Great. Okay, moving on. Number 3, we look at stable coins. Okay. Next, I'd like to turn to stable value coins, which are crypto tokens pegged or linked to the value of fiat currency. Yes, we know. Many of you have heard about Facebook efforts to stand up a stable coin called DM. Yeah, we remember that. Oh, it was Libra, wasn't it, before that? Good. Due to the global reach of Facebook's platform, this has gotten a lot of attention. Okay, fine. Ignore that. Then he goes, stablecoin market is worth $113 billion, including 4 large stablecoins. Yep. These stablecoins are embedded into crypto trading. 3/4 of trading on all crypto trading platforms occurred for a stablecoin. He's absolutely right. We need to get on top of this and make sure they're not being rehypothecated. And what that means is we need to make sure these stable coins, when people are they're placing their Bitcoin to get 8-9% interest on their Bitcoin, we need to make sure that Bitcoin is not being lent 10 to 20 other times to other people. Because then when people want their Bitcoin back, you can't get it back, and that's where you get a collapse. Exactly what we saw in the subprime mortgage crisis. Right? This is what happens in the traditional finance. I don't know why people are kicking off so differently about crypto. Fix it in your established industries before worrying about it in a nascent industry. Okay, seems to be favoritism here. That's my view. Okay, so he's saying, look, these stable coins are causing are a means for people to money launder, to avoid tax compliance and sanctions. Okay. And he says, I look forward to working with my colleagues on the President's Working Group on financial markets. Okay, so he's not really said what he feels he can do to address this. So we'll wait to see what his plan is around stablecoins. Next, I want to turn to investment vehicles providing exposure to crypto assets. Such investment vehicles already exist, with the largest among them having been around for 8 years and worth 20 billion. Also, there are a number of mutual funds. Yes, so we know these. Okay, so now he's looking at all the different kind of public vehicles which people can use to invest. Okay, I anticipate that there will be filings with regard to ETF, and he says I look forward to reviewing these. So he's saying, look, I know you're going to file for ETFs, and we're expecting it, and we're going to review them. So what he's saying is, look, we're going to be firm in our review process. He's not given us any clues either way, but he said, look, it sounds like he's going to be firm on these, and nothing willy-nilly is going to get through. He's really going to be rigorous before he allows an ETF to go through. The final policy area has to do with custody of crypto assets. The SEC is seeking comment on crypto custody arrangements by broker-dealers and relating to investment advisors. So he wants to prevent thief. Okay, so this is an important point, actually, guys. So, some people still don't understand that if you're buying crypto off of Robinhood, you don't have the keys to your crypto, therefore you don't own the crypto. And this is the point around who owns custody. If something goes wrong, who owned that Bitcoin and who needs to get remunerated? And I think Gary Gensler is right for putting this up as one of his 5 points here, and the last one he's put here. We need to have some sort of rules and a fair level playing field around this for people to be able to put some meaningful money in. And I think if we can resolve these issues, a lot more people will get involved into the crypto market, and a lot more of the right people who aren't trying to 100x leverage on a Bybit account, but trying to invest in the future because they believe in crypto and they want to mobilize themselves in the cryptocurrency world. Okay, so he says that's really important to him, and he goes, before I conclude, I'd like to note that we have taken and will continue to take our authorities as far as they go. Putting his foot down, he's saying, I'm not messing. I'm going to use whatever resource I've got to make sure we regulate this space and to make sure it's safe for investors, right? That's what he's saying. He wants it safe for investors. And he said, look, he's happy. He reiterates here again, he's happy with this test, with the Howie test. Okay, he's happy. He won't change. He's saying he's happy with the test, the definition of whether something is a security and a commodity. So he's putting his foot out to say, I'm not changing the Howie test. We're going to use that. No different how it's being used in the XRP case. And if we can find a security in any of these platforms, you'll need to regulate yourselves with the SEC. It's quite clear there. If you're an exchange and one of your securities listed on there is not following meets the Howie test to prove that one of the tokens is a security, then you'll need to follow the SEC Commission guidelines. Right, so he finishes off by saying, we stand ready to work closely with Congress. Yeah, fine. In my view, the legislative priority should center on crypto trading, lending, and DeFi platforms. So that's his first bet. And like I said, that's what he's going to do. He's going to try to find some securities and then use that to say, guys, legislate yourselves with us. And we saw that with Binance here in the UK, right? So Binance having to switch off their derivative service because as soon as you have a derivative, don't want to teach anyone to suck eggs here. Derivative is anything which is created as a formula on the underlying price of an asset, right? So if I say I can create a derivative called the Ijaz derivative, and what I'll do is I'll take the price of Bitcoin, I'll times it by 3 and divide by pi, right? Because I'm complicated like that. That could be my derivative, and you can buy and sell this token that I create, which is linked to the price of Bitcoin. So anybody trading these things, and traditionally these are options, these are futures, these are all these kind of things which we're used to. These are the leverage 3x. I don't know if you've seen these 3x coins. That's these types of things which, if you have those on your platforms, then you're going to have to be registered with, here in the UK, the Financial Conduct Authority, the FCA, but in America, the SEC. Okay, so we've seen this play out before. And here in the UK, a lot of the banks are actually stopping you from depositing into Binance. And obviously they're going to do that, right? They don't want your money sat in Binance. How do banks make money? They want the money sat in fiat in your bank accounts, right? So we're seeing that whole game play out as well. So it'll be interesting to see where we go with that. Standing astride isn't a suitable thing. I'd like to note that financial innovations throughout history don't long thrive outside of our public policy frameworks. And this is the point I want to close on, guys. I think, look, whilst I was a bit sarky there as I went through that, and I naturally I'm a bit of a cynic anytime I see a policymaker kind of cover innovation, because I feel like sometimes they're just standing in the way of innovation. They have an important part to play. I think until, I can't remember who said this, somebody said this, until there were traffic lights and lanes and proper infrastructures around cars didn't thrive and the automotive didn't thrive. And I do seriously believe we need a level of regulation here around the crypto space. Okay, we need, looking at the points he's addressed, we need some clarity around the leverage platforms. Agree. And people using it for anti-money laundering or tax evasion, etc. We need to understand the rehypothecation of stablecoins. I think that's an important point. I feel like we should get an ETF. There's no reason why we shouldn't get an ETF. And I think the fifth point was a really important one. We need to understand custody. We need to be clear around information, around who owns the coin, at what point, and where are the keys. Robinhood, sort that out. And I think the last point around information is a really important one. A lot of people around the ICOs and just coins in general, we need more transparency of information. No different to how we have stocks and we can file accounts and we understand what the data is and we can believe their revenue and profitability and know who the directors are. I think this is going to be important around the crypto space for us to be able to push on over the next decade. Okay, so in essence, regulation is good, but we don't want crazy amounts of regulation that is going to, really prevent us from growing at the pace we want to grow, because innovation is very delicate, right? We've got the perfect set of ingredients to grow. And if somebody from the outside, the government in particular, starts to intervene in the capital markets, that's when things can really start to be hindered. And I think that's what we need to keep an eye on. It was a good set of remarks there from Gary Gensler. I hope you found that useful. At least we know his stance, and now we can keep an eye on this moving forward. I'll see you in the next one.